You saw my text this morning. I love my new emoji. I'm going to be using it everywhere.
Good evening, everyone, and welcome to this week's Meet Your Trading Experts live and free. Market analysis, Sunday market analysis with the team from Maximus Wealth and Online Trading Profits. We're about to have a bit of a look at this market, and again, it's one of these weekends where I look at and I think I'm really pleased to have a team to have some different opinions, some different ways of looking at a market, because this is a market that's not simple, and different analysis and different ideas can help us to get on the right track with it. My encouragement to you guys is over time to pick out your one or two people that you really like, follow them, and see if you can use the education to get some extra benefit from it. Welcome all, and in a moment we'll be going to Julian. You can see here now he's going to talk macro market overviews. We've got Alexis and Ash, and after that Ainslie not far away on gold, Shukri on crypto, and what's going to be another packed up show. So let's get over to you, Julian. Julian, the macro position clear, but moving around a little bit at the moment.
Oh my God, yeah. Look, right. So listen, guys. Last week was interesting on 2 or 3 counts, and I think it went over everybody's head. Okay, so one of the key things that was happening last week was the ECB was sitting down, looking at their review for the last 18 months, trying to probably stay awake. But equally, what they did do is they came up with a slightly more amended version of how they're doing their inflation targeting. Now, it might be a bit of a nuance to you, me, and a lot of traders out there, but actually what was quite important was the language that Lagarde used around that. President Lagarde used to talk about what that inflation targeting was going to be looking like going forward. And I think she made it very clear they were uncomfortable to use the methodology that the Fed uses, we'll sort of guess what the rate's going to be, and we're going to try and make it vaguely about what we want our target to be over the course of time, right? I think it's a little bit more nuanced than that for the Fed, but you get my gist, right? The ECB were much more prescriptive, and they said we really don't want it to go too much over our target rate. We prefer almost to undershoot if we still had the opportunity to undershoot. So quite important. Okay. The second thing, which literally I think was missed by everybody in the market, was what was going on in China. So China reduced the reserves required, the central bank reduced the reserves required to hold by the commercial banks by about 50 basis points. They're going from 12.5 to 12. Critical? No. On the day? No. But why is that interesting? It's interesting because, again, of a bit of market plumbing and nuance in the money markets in China. Okay, so what this means is that why would the central bank be cutting reserves? You only normally cut reserves when you want people to start lending more money. Now, why would you want people to start lending more money? Well, that's because they're not. And I think that really is the point of this discussion. Okay, so China is possibly slowing down or stagnating. That doesn't make any sense, you said, because they must have a million back orders from all of those people in America, in Europe, and everything else who are saving their lockdown money, who are now spending it on brand new speedboats and jet skis and tennis rackets, right? But apparently that's not what's happening. Okay, if you look at China, yes, that was the case 6 months ago, but that story is now getting a little old. And if you look at purchasing orders in China, they're all falling. All the PMI stats are starting to underperform. So here's the thing, right? And the Chinese central bank is responding by cutting reserve requirements for the banks. They're trying to hold growth up. They're not trying to encourage more of it. They're trying to hold growth up. So this is a nuance that's quite important. Now, why is it quite important? Why do I mention this? Well, let's look forward now to this week, right? So what big news have we got out this week? So I'm looking at my Forex Factory news profile, and I've got my reds and my ambers in here. Unbelievably, I couldn't believe it, that industrial production in the States is considered only an amber alert now. When did that happen? Come on, Forex Factory, that's a red alert, right? You want to find out what's going on in the industrial space, but apparently not anymore. Anyway, so what's really interesting about this, right, is that we have towards the middle of the week and towards the tail end of the week, 2 things happening. Lots of central banks talking. Bank of Canada's chipping in. I think the ECB are talking Monday. The Fed's talking Tuesday. Bank of Canada rate conference on Thursday. And, there's some pesky CPI number from the States coming through on Wednesday, New Zealand time. So Tuesday, probably still Singapore time, Tuesday evening, Singapore time. CPI, our friend. Does everybody remember? Do you guys remember that CPI? A couple of months ago, 5%, I think we got above the highest level of CPI in 42 million years. Well, okay, here we go again. Here's our new chance. Is it going to go higher? Is it going to go lower? Expectations are, just looking at this now, expectations are about 0.5, 0.6 for the month. But the key thing is what's the annual headline rate going to be? Okay, so here we go. This is the thing, right? So why is all of those things important? Well, all those things important because something happened last week, and I'm still trying to figure out who did it. But there was clearly a very big seller in the asset markets at the beginning of last week, right? And it lasted for a couple of days. There was a lot of liquidation around the world, right? Somebody somewhere unloaded some big positions. I don't think they know anything. Maybe they're just doing a big asset reallocation. Okay, this is what these big fund managers do from time to time. Maybe taking some more back to cash. Who knows? Got to keep our eye on the price action with key economic data coming up this week, with the Chinese economy unbelievably looking to maybe slow down. What does that mean? If we see inflation coming off the boil now, and we've got industrial production in the States later on this month, if that also starts to show a little bit of a slowdown against the expectation. So think surprises, not the actual number, right? Think surprises against the actual number. Okay, then we might see some fireworks. Then there may be some people who feel that they are justified in selling off those big positions they had last week. And if that is the case, then the market could well start to come down again. So we need to watch that price action as it unfolds over the next week. It's really important. Let's chart of Bitcoin. Hey, while we're on Bitcoin, good point, Paul. Maybe Shukri can talk to this. Why is nothing happening in Bitcoin? By the way, this is a good thing. Bitcoin needed to settle down before you can buy it again. Volatility has to disappear from this market before people feel comfortable buying it again. Anyway, but that's beside the point. Paul, I think that's about it for me on the macro side. Guys, have fun this week. Good trading, and let's see what happens. Yet another exciting week as we rush towards Jackson Hole, which only seems to be about 5 weeks away now.
Thank you, mate. Just for the chart up, so we had a bit of a different background, mate, to different lots of black boxes with white letters on them while you're speaking. Next to you, I thought it'd show something a little more interesting to people.
You just want a big picture of me? That's all that's important, Paul.
Mate, that's fine. I don't know why we didn't just get you. I got a bunch of everybody. Mate, shall we check with Shukri? Put his hand up. Shall we check with Shukri what's happening to Bitcoin before you go? See if he's got anything about talking about.
Yeah, Joe. It is waiting for the 18th for the GBTC unlock, grayscale unlock. 15,000 BTC or a form of BTC is supposed to be unlocked then. So people are nervous. But on the other hand, that's what you see. What you do not see is there is a stealth rally already happening. DeFi and NFT gaming are going nuts. They started flying. I got into an IDO on Friday night. I put in $300. 35 hours later, now it's 7,000. I have not seen that for a long time, but it's coming back slowly.
And this is why I love cryptocurrencies, Shukri. You are amazing. Guys, how about that?
I'm going crazy.
Unbelievable, right? Unbelievable. You're looking at a genius here, guys. We are so lucky to have him.
We indeed are very lucky to have him, and that DeFi space is certainly an interesting space to keep an eye on. Look, I don't appear to have Ash in at this point, so let's go to Alexis and do fundamentals. I'll drop Ash a message and see if he's going to come and do a cross on the data not far away. Thank you very much for that, Julian, and for your Q&A with the customers earlier on tonight. And Shukri, thanks for that as well. We'll have you back on cryptocurrency in a few minutes. But first, let's go to Alexis and talk about fundamentals. Lexi, you ready to
go? Yes, ready to go. All right, hi everyone, and let's take a quick look at what's happening on the fundamental side of things. As usual, I'm going to take a look at some of the articles that have been popping up. A lot of interesting stuff. And let me just share a screen. Now, what I like to do is just run through a couple of headlines just to kind of get a brief overview of what has happened last week. So lots of interesting stuff has happened last week. All right, so July 10th, US and European stocks rebound while the bond rally pauses. So something has happened in the bond market. We have July 8th, plunge in treasury yields reverberates around markets. Equities are churning and borrowing costs for corporations are tumbling. So that's interesting. You have global stocks drop as investors focus on slowing growth. So this is over at the stock market side. So I think as what Julian has mentioned, there are some moves, big moves in the stock market. Why is moving, or what actually is causing it to move? I guess there's a lot of speculation going around. It could be a whole bunch of readjustment of their portfolios, as probably investors or the hedge fund managers, are trying to figure out which is the next best asset to go into. So there is, I would say, a shakedown happening in the markets, which is always good, because I think from the forex side of things, it allows us to readjust our bias and see whether we can pick up the pairs that have gotten away from us in the past couple of weeks, right? So when I look at the just look at the pure stats, all right, just based, again, a couple of headlines will give you a kind of a sentiment clue on what's happening. So we have here British pound growth disappoints. This is 52 hours ago. So the British economy grew about 3.6% in the past 3 months to May of 2021. And we've looked at the British GDP. I'm just going to click into it. You can see a minus 1.6% from a 1.3 previously. So as much as markets are opening because of the vaccination going on, and everyone is looking forward to opening, I think we have Australia, who just went back into lockdown again. We have Malaysia, whose numbers are increasingly high. So there is a big question mark on, while there is a lot of optimism on whether or not markets will start to boost, because there is, I think everybody is like waiting at the starting blocks, getting ready to take the jump off. Like, as soon as the gates open, they're going to come out running. But I think a lot of things, we have that wrench thrown into the works, because while markets are trying to open up, the COVID numbers spike again. We have China doing this weird stuff. They're trying to not just crack down on Bitcoin. They are, cracking down on their tech side. So things are changing on a pretty big way. And I think one reason China is crashing down, or it is kind of clamping down on their tech side, is because of money flow, right? China has always had a reputation of kind of under the table, being a little bit more controlling in terms of where the money goes. That they have a lot of restrictions on the inflows and outflows of money. And I think the tech sector will definitely be affected because of with everything opening up, with Bitcoin being in play, money is flowing fast and furious around, and I would say China likes to be in control, which actually brings me to this nice CNY USD chart. All right, so this is on a daily time frame chart. Now, I like this picture over here, because it is very curious. Over the past, I would say, month or so, we had China having the crackdown on the Bitcoin. You see the Chinese renminbi actually came off, right? And then we have another second round. I think on the daily time frame, we have another small little dip over here, probably because of the stock markets in terms of the tech stocks in China. They are trying to crack down on tech stocks as well, and another small dip over here. Now, what's interesting is if I just move this line over here. Okay, so I was trying to figure out how much will China allow its renminbi to weaken, or I wouldn't say devalue, but more of weaken against USD, right? Because USD is like the major tradable currency globally. So will China allow its renminbi to go beyond a certain level? And I am looking at a couple of levels. So let's go to the weekly time frame. Let me just scroll it up a bit to get the. Okay, and we are at a very interesting level, because if I just take this exact same blue line over here, and I'm just going to pull it all the way over here, it is at a very interesting level for me to kind of notice, right? So my question next will, whatever's been happening in China, will they actually allow their RMB, to hit the next level below this area? So this is an area which is a question mark for me, because there's a couple of things that are going to be tied into this. Mainly, as you know, China is a major exporter, right? So if China, the Chinese renminbi does weaken against the USD, there are going to be some of the currencies following suit. They're going to be, they're going to look at Australia, one of the closer, I would say, one of the closer partners, trading partners with China, will probably be affected as well. And that's what I always like to see as a proxy of this. All right, so I'm going to zoom on a little bit further. Okay, so again, if I just draw this out over here, okay, you can see that we're at a very interesting level on the renminbi charts. All right, we are at what I think is like a midline between the top and the bottom. I'm just going to scroll down. So we are at a kind of midline over here, which gets interesting because it's either a fast, quick drop to the next level or a nice bounce to the next level, right? But I think looking at how China is being really it's coming down really hard on this on its tech stocks, and it's not just tech stocks, it's Bitcoin, it's something's happening over there. All right, I don't know what, but something's happening over there, and I'm pretty my bias is pretty much on the downside of this because I think even the technicals are kind of showing a nice weakening here on the weekly charts. So with that in mind, with a bias that something's happening over in China, what it means for me is I want to wait for the opportunities that's going to come. So of course, for this, I'm going to go back to the Aussie. All right. And with a potential bias of a weakening renminbi, my bias is on a weakening of the Aussie dollar. On the back of Aussie, being in a second lockdown, I'm not sure how that will affect the sentimentals, the sentiments, but I'm going to, let the Aussies, hopefully Ainslie and Geoff can give us some insight down there on their second lockdown. But my next question for the Aussie is, are we at a level that allows for that pullback, that dip? Because as you can see, Aussie had a lot of greens last week. All right, a lot of bounces on the last Friday last week. So if I am scrolling down just past the Aussies, I am just interested to see whether or not Aussie will go down further. And I know that there's a lot of that Aussie in terms of its technicals. I'm just show you what I mean by that. You can see, let's go to Australia. In terms of fundamentals, you can see Australia has a small positive GDP, decent jobless rate, controllable inflation. If you compare it to the US of 5%, pound I think is 2+%. It looks like it's holding itself pretty decently. All right, but again, with all that's been happening in China and with Australia going in its second lockdown, I am not sure if I'm not sure if the Aussie dollar can give us the bounce that I'm looking for. So my kind of what I'm waiting for is to see whether we reach a level where I can short the Aussie. All right, so really sorry to the Aussie friends out there, but I am waiting for a weakening of the Aussie. And of course, my favorite play is actually a weakening of the Aussie against the USD. All right, so I have been waiting for those of you who have followed me last week. Let me go back to the daily chart over here. Okay, swap a little bit. All right, so for those of you who have caught this last week, the first wave down, my next question is, will this break of this level give us the next level? And of course, my target is over here. And the targets come from a very purely technical level, right? But my bias is still towards the downside, especially for the Aussie dollar. Not sure if I will be right or wrong, but based on what we are seeing on the, I would say because China is like a global player on it, I'm not sure whether or not it will come to fruition, but I am definitely more towards a short on the Aussie bias. So I'm waiting for Aussie shorts next week, and that's pretty much what I'm waiting for. So that would be about it for me.
Cheers, Alexis. Thank you very much for that. We'll watch that Aussie with some interest. It is an interesting setup, isn't it, with some decent numbers in Australia, but that breakout in New South Wales looks in danger of getting out of control. And they've lost, I think, 2.3 billion they lost on the first 2 weeks of the lockdown.
Yeah.
Extending it again at the moment and strengthening it. People in Sydney are being told to not leave their homes at the moment, and that's very un-Australian. They've been a bit lax, not lax. They've been a little bit more relaxed in the way they do things than we have, and I'll be interested to see how that does play out over the next couple of weeks. This Delta variant continues to be if someone bailed out of a lot of stock positions and rebalanced last week, I do wonder if there's some concern that we don't have the reserves to deal with another COVID breakout or something that gets past vaccines. And I think some safety on the short side isn't a bad idea at the moment. I'm not saying we should all be short. I'm saying we should have some some little plan in case it all falls quite quickly to pieces. Thank you for that, Alexis. Really do appreciate it. So we've had Julian do macro markets. We've had Alexis come in and do fundamentals. Now we're going to have Ash come in and do the data. What is the data telling us this week? We've seen big swings in ownership of gold in the last couple of weeks. What are we seeing this week, Ash?
Yeah, so last week we did choose gold as a potential trade for something to get on board with last week. And I really wanted to watch how that situation develops. And there are some significant signs this week. So when we look at, because we're always trading gold, obviously, against the dollar, that's how it's priced, certainly on our MT4. And if we look at what's happened with the dollar, everybody knows what the price action is. It pushed right up to a sell zone. It pushed up to a point of resistance. And the COT data, look at this, 157% shorts were added from Tuesday to Tuesday. So Tuesday from the prior week to Tuesday of last week, 77% of shorts were added. We didn't really see the price action take off with something like gold, which I thought was maybe a little bit concerning. But what we're seeing really with what's going on with the dollar is that these positions that may well have been taken, particularly in gold and the yen, should probably be held on to. So it's not really suggesting this week that initiating anything new that has already moved would be that wise. But it is saying that, if we've already got those positions on, particularly against the dollar, if we are trading gold, and maybe as you talk about the safety, maybe that would edge us towards the yen. Holding on to those positions looks like the right thing to do. So let's have a look at the seasonal pattern on the dollar as well. So we see the 6-month index down to 0. So that's suggesting near-term negativity with the dollar. The 18-month index is around about 33%, which is really a no man's land. I don't really like to read it when it's not at an extreme. So that's nowhere near extreme. And the 53% is not at an extreme either. So that's the 36th month. So on the longer term, we're not really getting the messaging that we need to know what to do with the dollar over the course of the year. But certainly in the near term, it's suggesting that some weakness should come back in with the dollar, and will probably stay within the range that we've been in, albeit with a broader range now that we've managed to take off. So the seasonal pattern on the dollar throughout July is weak as well. We see that around about the first week, we do start to dip down right the way through to August. Then there's this sideways kind of movement right the way through until around about the end of September. So looking at the seasonals, we're looking at the weaker dollar. Looking at the COT data in the near term with this 157% shorts, which is extreme. That's a big number. With that added to the shorts, that is suggesting that the dollar will be weaker in the near term. Now we compare it with a couple of those defensive plays like gold. Well, gold has managed to pop up to the 80% mark on the 6th month and 89% on the 18 month as well. So looks like there's some positivity now starting to pick up the pace with gold. As I say, we did pick into it last week, and it's suggesting that we should hold on to those positions, particularly when we look at the seasonals. This is the absolute opposite so it's the inverse mirror, if you like, to what we saw with the dollar, where in July we really do start to ramp it up into August, and then a proper explosive move right up until near the middle of September as well. So we were looking at the dollar around about the end of September. Looks like gold around about the middle of September will continue its rally. So we're looking at gold long, dollar short in accordance to the COT data. And we will just have a quick look at the yen, because the yen is something that we've been interested in now for a few weeks. And it's still very, very positive. 6 month is at 100%. The 18 month is at 100%. The 36 months at 78%. Now, I like to see it go over 80 to get that kind of more extreme area. So it's not quite at the 80, but that is bullish enough when we take into consideration what's going on in the 6 month and the 18 month to suggest that we should stick with that long yen analysis and that long yen bias. Looking at July, it's a little bit flat, but it's already come up from a pretty good place from June. But then again, August right the way through to around about September, the yen does have another leg potentially to the upside when it comes down to what we're looking at with the seasonals. Same with the weighted average as well, which would pick up around about the middle of July, right up until the peak looks like around about the middle of August. So to summarize on this, we are looking at short dollar, and we're probably looking at short dollar specifically, trading it against long with gold and sticking with the long with the yen if we are on board with those. That will wrap that up.
Cheers, Ash. Thank you very much for that. More information on that in the strategy bias group. I think Trade of the Week will be in there with some numbers as well, right?
Yes, it will. Yeah. I'll be looking at the trade of the week, and I will update that by the open of the market tomorrow.
Cheers, Ash. Thank you very much for that. So we've had a look at the macro view. We've had a look at the fundamentals. We've had a look at the data. Now we're going to get a bit more specific and get into some of these markets. Let's start with Ainslie and gold. Ainslie, a bit of a mixed week for gold last week. Looked like it was going to break out 2 or 3 times, never quite went.
It did. It really. I'll just grab a screen there, Ash. I'll just knock you off. Sorry. And let's pull this screen up because it's really what's really interesting about this, Paul, is that we just hit this monthly pivot and just found no more momentum after that. It tried, and it just didn't go there. There was quite a bit of information coming out regarding bond yields. It flipped around. There was just nothing in the market, despite the rundown that Julian's given us, just nothing in the market to really just sort of give it the kick along. The information that Ash has just shared with us with the COT data and the turnaround and the seasonals, and it's, I like to keep an eye on my seasonals, is that it's about the 9th, 10th that we start to look at a dip in gold before it does its rally. So we've done the first week of July, and then after the first week of July, we start to see the seasonal uptake for July, August, and into September. So they're really key points. But as you can see here on the daily, it really just didn't go. There was nothing that could take it. It's not just head straight into that monthly pivot, the 100 exponential moving average and my 50 exponential moving average. It's still saying it's still looking like it still wants to go north. And I've got to say, on the background of all the information that we've just been delivered with, China's doing this, and the CPIs are coming out. CPIs coming out during the week and on Thursday morning, and all these other bits and pieces that we should be getting quite excited about, as far as, hey, this is causing a push down on the US dollar, and it's going to do all the rest of it. Gold's just sitting here. Gold's being just sitting waiting. And I think we might be really lucky with the whole, apart from being the seasonal bias, we're going to be, I think we're just going to be starting to look, gold's looking very, very shiny again. Central bank interest has actually started to pick up. So that's another good thing that you always want on your side. And that information came out at the beginning of the week as well, that central banks around the world are definitely becoming a little more interested in gold again, as far as maybe it is something nice and solid with intrinsic value that will hold on. So stand by, let's see. And we're looking for a good close over 18.13. I think on the broadcast group, I had a typo there. I had terrible eyes last week and I typed 18.12, but I'm looking for a stronger move and a good close over 18.13, which is up around this pivot area up in here. So stand by, let's see how we go. And that's it for me on gold, Paul.
Cheers, Ainslie. Interesting. This is where that little bit of professionalism comes in. So seasonally, while we have a big run coming, perhaps a little dip early in the week, perhaps a chance to do some buying early in the week before this, if the seasonal move comes along, to position ourselves for it.
Yeah, look, you can see where it's going. It's just gone sideways. We had that second, that higher low off the bottom of that 1750, and then we've come up and then we just sort of consolidated. And we, as we always get with nice move up, we get that consolidation period. And if it comes down a bit more, I'd say, yeah, tuck in, start building into those positions, because if it's going to run and it runs for a while, then we could be good. Now, we've got to get over that monthly pivot, which is obviously providing a lot of resistance at the moment, but stand by, wait one, and let's see how we go.
Yeah, monthly pivot and then 18, 15 horizontal ride. So if we can get a close above those in a decent time frame, she looks all on for young and old, doesn't she? And we'll watch gold. Sorry?
I hope so. Well, I won't be doing anything else in lockdown, as our lockdown looks like it's going to be extended again. And with everything that Lexi was just talking about with the Aussie dollar looking to go south, yeah, we're looking at some severe lockdowns, actually, even down to the point where they're talking about one person going to do the grocery shopping in the family. That's it. We've had police looking in people's shopping bags to make sure it's essential shopping that they're doing. It's really, really
good news. You're not going to look out for too much longer, because they're going to move all the rugby league sides out of Sydney to get away from the lockdown. And if they do that, that'll be half your offenders gone.
Yeah, well, after rugby, but yeah, between that and the much awaited Singapore Australian bubble, we've been told travel bubble was bumped, that was going to open next month. Guess what? That ain't happening.
Yeah, I've got plans to be in Singapore in December from New Zealand, and I've got to say, I think even though I get pushed back a couple of months now, I think it's going to get harder. In fact, I think it's going to get harder and harder to travel until we work out whether we're going to try and eliminate it or whether we're going to try and live with it, because we're doing different things, but it's going to be difficult to deal with. Rightio, that is gold for now. We'll have you back for oil, one of the ones that has had an interesting week, really, the oil chart. But first of all, Shukri, no Bitcoin weekend spike this weekend.
No, it is not going anywhere, but it's good because people are still nervous about the unlocking, which is going to happen on the 18th. So, but there's a new market coming, Paul. There's a new market coming already, and I'll show you what it is. But this is Bitcoin not going anywhere. So if you measure just a simple measurement of the distribution, Wyckoff distribution phase, 3 months, that started 8 February until 13th May. So to be fair, this could go until mid-August, and that's okay as long as it sticks around here. The main test is next week on the 18th. If you can hold this, there's a bunch of news coming, which is Elon's meeting with Jack Dorsey, the Tesla results, the potential ETF, Bitcoin ETF. Kathy Wood has applied all that. So we might be stuck here, but that's not the big news this week. The big news is NFTs. Okay, so we already saw that DeFi was on a stealth rally. I already told you guys that, I haven't seen, I have this IDO called Formation Fi. It went at 10x. It shocked me, but that's just what DeFi is doing now. And of course, after that, you could see the DeFi cryptos move. Right now, there's another market, and this is a real market, guys. This is not even speculation. It is called NFTs. Look at this. This is Axie Infinity, a game in NFTs. And I just wonder, because, several months ago, Paul, I know that Julie's son was buying a lot of Axies. So I just wonder, man, that kid is going to be rich than his parents. Okay, that is something I can guarantee you. This is bigger than Pancake Swap. They don't have Uniswap here. Of course, Uniswap will be bigger than Axie, but that's not the point. You have people buying things, gaming things that are bigger than the rest of the other crypto protocols, and that's great. And there's another IDO coming up in August that's called Engine. That's another blockchain for NFTs. That's good. And you see Axies here. What happened to Axie? It went up above the all-time high. It's already in a bullish mode. Don't talk about crypto. Crypto is still waiting for it to hit the all-time high again, right? Axie has gone beyond that, and this is real, and this is good. So so I told you about 10x IDOs are now very possible in the DeFi space. Look at this. So those in my class on Saturday would see, right? I showed you guys this. I went to this on like Friday night. I put in $300. It's already 7,000. That's 20. So you see that the DeFi thing, the NFT thing is even bigger than the DeFi crypto. So I think going forward, Paul, and we split Crypto Moon into two, right? Because we have to look at NFTs as a totally different market. It's different. It's
flying. That's on Monday, Shukri. I think that's certainly worth doing. So really, mate, at the moment we're looking for new coin offerings in DeFi space and NFTs to make our money. That's where the big money lies if you can find the right ones, right?
Yeah, it's already happening now. You have to find the good ones, but nowadays the bad ones, you don't have a lot of bad ones nowadays, because they don't want to list. So yeah. you see the good ones coming, but again, the IDO space I think is coming up, and we stick to the good ones. Just nice, isn't it? Yeah, it's amazing. We haven't seen this in a long time, and it's holding this price.
And we've got some big announcements coming in the space in the next 2 to 3 weeks. We'll talk a bit more about that as we go through them, but big announcements coming in the crypto space over the next 2 or 3 weeks, which should include a little bit of stuff about the DeFi area and some chances to get involved in a coin launch or two on the one of the stealth launches.
Yeah, so you guys, you have to remember that, just so that people realize something, you have to remember there's Bitcoin, which is doing nothing. There's Ethereum, which is going up. And this is Compound, DeFi, which is already going up. So I think we're going to see a really different space after the middle of August. That's all I have to say.
But this is the big thing, right? There's a release of Bitcoin coming in a couple of weeks. So we're expecting that's being priced in at the moment. That there'll be more supply, so there'll be less value, and this is starting to be priced into the market right now. And these releases of Bitcoin happen every few months. But after that, we're expecting to see. So about a week away, isn't it? The big release.
Yeah, yeah. But now the good thing is this. Okay, the good thing is this. As I've showed you this axis right now. DeFi has a use case. Okay, let's just say this is a bear market and everyone is scared. Guys, where are you going to put your money? I don't know where. I still want to put it in DeFi, right?
DeFi, you get the yield, right? If nothing else, you get the guaranteed yield, right? And
I know.
If the price starts to drop, the yield gets higher, right? So yeah, it's a good space for yield, right, in the DeFi market.
And the next thing is we also solve the second problem. Why are NFTs going up? Because it's for the consumer. It's for everyone. Everyone understands NFTs now, it seems. Because these are real sales numbers. Even you look at, I don't have the chart here, but if you look at sales, they are just going up the roof again. And we thought we were in a bubble like 2 months ago. No, they've exceeded that. So people now have come to accept the NFTs, say these are for real.
Like it. Okay. Thank you very much, Shukri. I'll talk to you in a meeting in about 20 minutes. Might catch you in there. Thank you. Back to Ainslie to talk about oil. Ainslie, oil has had an interesting week, hasn't it?
It's been all over the shop, hasn't it? It just was all over the place.
I don't mind being all over the place when it comes to really good support, and it found really good support off monthly pivot and 50 EMA, right?
Yeah, on the 4 hourly, we found a nice support down here on the 200 moving average. But yeah, look, down here, back down to this level on the daily, as you can see, it came down, completely hit level of resistance support, and then bounced straight back up again. I mean, obviously here we had some argy-bargy still with Russia and the Saudis over restrictions and levels, and it played out during the week and it just kept going. And look, I heard commentary on Friday. Somebody said, with everything else that was going on, did those oil guys just work it out in the end? And I don't actually think we got a definitive answer out of that. But hey, look, we came down, found support. Oil's is on a seasonal tear anyway for through until about the end of September now. So, we are looking pretty strong. There was a pretty good recovery on Thursday and Friday. And I think we just have to see how we go. Keep an ear on the fundamentals, as I would say. They're just so sensitive to anything that the Russians or the Saudis argue about at the moment is very, very sensitive and can cause these huge declines that you can see here on the 4-hourly chart, and they happen so quickly and so abruptly. They will catch you off guard if you are not sitting with some good tight stops. And so that from up there where we were up over $76 and straight back down to $70, 70.80, what was it, 70.85? I think it was, yeah, 70.80. So that was, you know, $6 in 2 days, and it was just like straight down. That was straight down out the window, as they say, up the stairs. And price action can go up the stairs and then come straight down out the window. So we've gone pretty quickly from where to go, but we have climbed up and regained, you know, I would say good 50%, 60% of the losses that we sustained last week by the end of the week. So it's now cleared that weekly pivot. We've had a good bounce off the monthly pivot, and I will expect to see this to keep going on its way up to $80 this week as well. So yeah, big moves, but all in all, nothing that we didn't expect anyway. So let's see how we go this week.
Cheers, Ainslie. Thank you very much for that. Yeah, the oil market's been fascinating for a while now. We'll keep an eye on it again this week for sure. Next up, we've got Lloyd talking about his currency strength index, or his currency strength analysis, providing some great results to his trading. Lloyd, you with us?
Hi, Paul. Good evening, everyone. Or good morning somewhere.
Welcome back, mate.
Right, so let me grab the screens. Right, so I think I've been seeing some interesting developments in the markets. So let me go through them. So the first one is actually CXY, the Canadian index. You can see for the past, I think 1 month back, I've been cautioning about $83 because simply it's been rejected in the past. So that price indeed did get rejected. Not keeping pace with the fundamentals. I'm not sure why, but you can see that from 83 it got back down to $80, and then we form a very nice rejection bar. Now from here, I've always cautioned not to trade near a horizontal level. Yeah, that's from the actual time frame. That means on the weekly time frame. But on the H4, we may see some opportunities. Yeah, so later I'll go through them. Now I'm expecting, this is overall still an uptrend, so I'm still expecting price to actually bounce off $80. Yeah, so trade the trend. Then the second is actually pound. Now, other than CXY, the rest below I have to give you a heads up is that I don't see any bullishness coming in. Yeah, I'll show you all why. Look for the British index, British pound index. The thing is that looking over the past 3 months, yeah, if I remove the 140 horizontal level, price is simply just in a range. It's really not going anywhere. It did bounce off a short-term horizontal level in the past, yeah, which is I think 2 months back. But straight above it is the hard horizontal of 140. Yeah, so I don't really recommend trading this British pound. Yeah, we need to wait for price to actually give us more direction, whether it's going to break above about 142 or back below 1375. Then we get a clearer picture. Yeah, so for now, even in the past, you can see that this pattern actually did appear in the past before, which is quite recent, in fact. Yeah, from a weekly time frame perspective. Yeah, so in lieu of that, I don't really recommend jumping in straight British pound unless you are really trading on a very short time frame. Then the analysis is actually going long. Rather than that, for 4 hour or even the daily, I would say keep out of it. Now the Euro index, pound and Euro is actually quite positively correlated. Yeah, that means they always they are best buddy, go hand in hand. So you can see when pound displays the same pattern, Euro shouldn't be too far back. Yeah. So as such, these two best buddy, I would say keep out unless you're a range trader. Yeah, because I don't really have a strong direction bias for either of them. Now Swiss, this is interesting. So from a short-term perspective, you can see that price is giving me lower high and lower low. Yeah. So essentially, what I'm waiting for is waiting for price to go back to 110, giving me a rejection, and then I can trade off this level. Yeah, so Swiss, I think for the immediate week ahead, I'm actually looking for short positions. Yeah, so there are some very, very strong inclination to it. So keep a look out for Swiss. Now Kiwi, Kiwi and Aussie, this is two that actually interest me. Yeah. So why do I say that? Wherever price, if you recall, I think for the past few months I've been saying that Aussie is in consolidation, Kiwi has joined Aussie in consolidation for the past 3 months. Now, after a consolidation, when price breakout, usually that's the most interesting play that comes in. Yeah, price will actually go on a trend if it actually breaks out successfully. So what we can see here is that on the $70 level, price did test once without looking at the range. Price tested once, go back to the range, tested twice. Yeah. So now, if I put in a range, which this box has been in play for some time, price is actually breaks the range, retest a second time. Yeah. So what I'm waiting for exactly is actually for price to actually get rejected off the range. So I'm actually putting a small position here, and I'm also waiting for price to do this. This will be I would say the ultimate play that I'm waiting for Kiwi currency. Yeah. So long-term perspective, I'm waiting for Kiwi to actually weaken. I don't know whether that will happen, but at least the chart does suggest so. Aussie is in the same position. Now Aussie is even better than Kiwi in the sense that it does not have any strong horizontal level that is in the way. Yeah. So in fact, you can see that price break, retest. So now I'm just waiting for a short position to occur. Yeah, I'm going to short Aussie. I think Alexis previously also mentioned that her fundamental bias is to go short. So we shall see whether these two will play out. I'm actually rather bearish about yen, but the issue with yen is that straight ahead it has a 90 horizontal level smacked right in its face. And you can see from the past, it doesn't really perform. It loves this horizontal so much that it get back up. Yeah. So although I'm bearish, I'm very cautiously bearish. Yeah. So I would still trade it, but in the sense that I will have a immediate TP1 if I do enter into any trade for yen short. Now DXY. So again, very magical 90. I don't know why it got back up, but the horizontal level plays its part. Price goes back. I don't usually use trend line for my analysis, but since this is really obvious to me, 3 touches of trend line, and also if I get rid of this trend line, you can see that this is a previous high. Yeah, so very near this previous high, price has not even touched it, but you can see 2 rejection over here. Yeah, as such, I'm pretty bearish about DXY in the upcoming week. Yeah, so don't know whether we'll get any setup. I'll keep a lookout for it. So as such, according to this analysis, I'll be having a dollar cap short play. Yeah. So on the H4 chart, you can see that this is definitely on the uptrend, but if you look closely on daily, this is still very much on a downtrend. Yeah. So I will simply interpret this on a daily chart. Price is having a deeper retracement. So on H4, a break and retest from bottom. Once it happens, then I'll happily jump in short. Same thing for pound yen. Less of this play, but it is still very much valid. You can see the very, very bullish retracement. I'm waiting for price to either hit this horizontal level, which is really the bounce point from previously, or the trend line, and then going in for a short position. Oops, a wrong color. That should be red. Yep. So these are the 2 pairs where I'll closely look out for in the upcoming week hit, and then not forgetting the other indices analysis. There may be some good short-term play if you're on the hourly or even the lower time frame. Yeah. However, most of them are really near a horizontal level, so I'll advise anybody who's trading to have a quick TP1 just in case. All right, so that's all for me, and I'll see you on Tuesday.
Cheers, Lloyd. Thank you for that. Fascinating as always. Nice to have wandered through the day today. We've had the macro market stuff. We've had the fundamental stuff. We've had the data stuff. We've looked at gold. We've looked at oil. We've looked at the products. We've looked at crypto. And then we've looked at the overview of the currencies and the indices. And now we're going to get the technicians' 2 cents with. Geoff, you're here to come and give us a technical view on the market.
G'day, PB. I'm not sure if you can see me. My camera seems to be on.
Yep, you're up.
Oh, there we go. I'm a little bit low in the frame. There you go. Low life. Thanks for the intro. This week I've got technicals fighting each other actually, and that's going to be very, very interesting. You may have to wait till the middle of the week before that actually sorts itself out. First one I'm looking at is Swissy yen. And Swissy yen, I think this was on our radar last week as well, because we had this reversal bar here that was fighting against the previous reversal bar. Since then, we've had, sorry, that was 2 weeks ago. Since then, we've had 2 inside bars on this particular, what I call a key reversal bar. That to me is telling me that there's energy being stored here, and this is going to break at some stage. To which direction you can only guess at this point. But if you look at the indicators, this massive key reversal bar versus this smaller key reversal bar, you're probably going to go with the big bear, if you like. Then I go back to this chart and I have a look at that, and what's the most dominant play here, or the most dominant chart pattern, and it seems to be this base. Then we've got another base and another base and another base, and I'm looking at this current trend, which is telling me very, very clearly that price is on its way up. So I'm kind of with that, with these two key reversal bars, or sorry, the fighting key reversal bars and the two inside bars. And I'm inclined to give this a chance to go long again. I'm not committed to actually placing that order at this moment, but I want to see what happens tomorrow and maybe even Tuesday. If we can break above these pivots, this is on the daily chart now, and maybe give us another higher low, I think this is well worth our attention to go long on Swissy yen. It's not clear cut, and it does depend on whether this price action takes place. I can see another little double bottom sitting here as well. It's interesting. Euro pound, again, that's fighting itself. And the reason I say that is on the weekly chart, we've got another key reversal bar, in my opinion anyway. We've had a sequence of bars that just cannot get above this monthly pivot, and we're seeing that again. No. It's like, okay, what's going on here? But then I see on the bigger picture, we are really at the bottom of this range. That again, no, and no on the bottom side as well. Every time I see that, it invites me to look for a higher low to trade it back to the top of that range. So it's a little bit conflicting right now to understand that we've got a key reversal bar telling me short, but we've also got a potential higher low. And then I look at this bar here, which really appears to be dominating everything. We've, I guess, ducked above it for what, 1, 2, 3, 4 weeks, but then we've been inside it for the rest of that time. So I'm thinking long here, not short, which goes with, goes against my weekly view. So again, I'm going to sit this one out for right now, but I'll be looking for the indicators that tell me, and there'll be price action that tells me that there is a higher low in place here. Maybe that was it, and look to trade it back to the top of the range. Like I said, everything seems to be fighting each other here in my technical analysis anyway. And here's another one. Pound yen on the monthly chart is indicating to me that it's a very, very strong base that's been formed here. But inside that base, we've got this box range at which we are now topping. So it kind of goes with my mantra, if you like, that, and this is very early in the piece. I know we're on a monthly chart, but this is very, very early in the piece. We've only had 2 lows, and this may be the second high, it may not be. But I'd be looking for a lower high here on a monthly chart. I know you can't trade that right now, but it may be that we get this sort of price action happening where we go back to the breakout level, this breakout here from this level, and we come back to that, then put in a lower high. So the weekly chart is telling me key reversal long. Monthly chart is telling me key reversal short, and that's where it becomes tricky. So what I need to do here is work out exactly which way that's going to go in the first instance, and the first instance is telling me short to this level, then long off that. Then we look for short again. So I'm looking for a short here. The weekly chart is telling me long. And again, I go back to that premise that the technicals are really confusing me. That's not the case on the next 2 I'm going to show you, but bear that in mind as we go to euro dollar. Euro dollar is probably as clear as it can get to me that we need to trade this long, and long this week. Why? Well, the structure is very, very clear that we're in a channel that's going long. We've had a false breakout of that. Beautiful, beautiful re-entry back into there, etc., etc. But now we've got exactly the same thing happening on the bottom side. We've got a key reversal bar on the weekly chart, which is telling me to go long. Am I willing to go long tomorrow morning? Look, I probably am, depending on what price does over the gap scenario. If there's a gap, then okay, we reassess. But if price opens up here, I'd just like to see a little bit of a pullback. Then I would put an entry long above that bar there. Pick your poison as to where you want to have your risk. It may well be here. It may well be just straight underneath the bar. I'm happy either way. If you want to be a little bit more conservative, wait for the daily charts to unfold a little bit, and that might be with another higher low here, and that works for me as well, as does the 4 hour. I probably won't make a decision on that until tomorrow, and I see if there's a gap. The other one that's pretty clear to me, and I've been in this trade for quite some time. In fact, swaps are probably going to become a bit of an issue. But the weekly is giving me a very, very clear key reversal bar. And the monthly is telling me that we've had a false break of the ascending channel. I've had a target up here for the longest time. We appear to have gone past that. Now I've got a new target up here. I think we've got a strong chance of getting there in time. That's going to take a while, of course, but we appear to be back inside that range, and we appear to be headed towards the top of this range, which, as I said, will take a long time. Weekly chart, key reversal bar we've got. Daily chart, tomorrow it's going to be very, very tough to trade long here. You need to see a higher low in this position, I think, to actually get into that market, unless, of course, you want to trade it on the weekly chart and take that resistance level into consideration. I would probably advise against that. There'll probably be a better entry if you're not already in it. So there you go. Euro, dollar and pound Kiwi, I think, are the clearest indicators that we're going long on both. And if you get an opportunity to trade into those, then happy days. I think you'll get a result at some stage. You can next see me tomorrow with Ash on Trading Buddies. And that, of course, takes place Monday, Tuesday, Wednesday, Thursday at 5 to 3 Hong Kong and Singapore, and wherever you are in the world, equate it to that. It's just before the London Open by 5 minutes. So there you go. That is my 2 cents worth.
Cheers, Geoff. Fascinating stuff. Interesting markets at the moment. I don't know if I would, they appear to be getting a bit clearer to me overall, but they've certainly had a challenging few months. So we'll watch and see if they get a little bit clearer. Those guys are in Trading Buddies with you guys Monday to Thursday, just before 3 o'clock Sing. That's just before 5 Australia, just before 7 New Zealand, and just before 8 a.m. UK. Thanks for that, team. Been a great show, and interesting to see what these markets do. Look forward to seeing you next week, Geoff. In the meantime, you enjoy yourself and living that normal life in Tasmania while the rest of Australia locked down.
Praise the Lord, mate. What a good move that was.
Indeed. You didn't stay in Sydney.
Have
a good week, mate. Cheers,
too.
everyone. Thank you, mate. Cheers, everyone. Thanks to the team for coming in and sharing, and to all of you that are watching on the different mediums. Thanks for your company today. I do hope you got some value out of it. Remember, guys, stay calm and make good decisions, and things can work out for you or will work out for you. And it's an educational show for educational purposes only. Thanks, everybody. See you all.